Okay, good morning, Blane.
Hey, morning, Helene. How are you? How are you?
Good, how are you doing?
Good, doing well. It looks like we have today's TOD live coming to you live this Tuesday here, July 22nd, about midway through the summer here. Yeah, another exciting day in the markets, Helene. Some interesting stuff going on. We're going to hop into here pretty quickly, and I think we have a handful of pretty attractive looking trade opportunities. In fact, might even look to go ahead and place one or two live here on today's call. So. Excited to be here. Looks like we have
Same
a few
here.
folks piling in the room here live joining with us. So welcome in everybody. Highly encourage you to go ahead and just go ahead and post in the chat. We'd love to hear from you. I see Brad, I see Carlos, I see James. Welcome in everybody. Go ahead and post in the chat and just say hey. Glad to have you here. But I think we can probably go ahead and get started. Helene, let me go ahead and take over the screen share here and
Sounds
just get
great.
my get the charts up and going. Um, but so yeah, here's what we have today, folks. Helene, anything you want to say right off the bat? I know I have a few things I want to point out in this chart right here. But what are some things that you're seeing?
Yeah, I mean, we've been on this grind higher now for a bit now, and it feels like things might be slowing down a bit momentum wise, and uh which is it's funny to say because you're looking at the chart and you're like, what? How could you say that? We're hitting these new highs, everything feels good, but it definitely feels like there's a slowing. I don't know if you feel the same way, Blaine.
I do, yeah, for sure. No, it's, you clearly pointed out that, in the last week, there's been numerous occasions where we've continued to make either new all-time closing highs or new intraday highs, just like we saw yesterday. But, with yesterday's trading action, we did see one of those really reliable bearish reversal. So it's, we've pointed out a couple examples recently of a bullish hammer reversal being a really good
Mhm.
sign. We saw the inverse of that yesterday, seeing that bearish hammer right here, seeing stocks, rally up and then close all the way down your session lows, almost no wick on the bottom of that bar. So, it definitely starting to see some signs of slowing momentum despite the new all-time highs that we've set plenty of recently. And good way you can think about it is just imagine if you just drew two horizontal lines across this chart. It kind of helps that we have the grid pattern on the back of the chart here, but just take this 6250 level right here and then take 6300 and look at how many trading days have traded within that 50-point range on the S&P 500. That's really, I mean, of course, if you gained 50 points in the S&P in a single day, that would be a pretty substantial move. But if you've been stuck within a 50-point range on the S&P for, a little over 2 weeks worth of trading days at this point, that's really, even though we've been, continually being able to edge out those new all-time highs, just slowly grinding higher, to your point, Helene, you're really, even though you're moving higher, you're not gaining a lot of ground. So all that to
Exactly.
say that momentum to the upside, that, incredible velocity to the upside, like we saw in late April, throughout May, through parts of June, has really started to slow. And so even though we have, the underlying bullish trend still firmly intact, that's abundantly clear. Can see that there with the 50-day trading clearly above that 200-day moving average. Really strong technical buy signal. Still making that series of higher highs and higher lows, but we're just pointing out that we're starting to see a bit of slowing in momentum. And that's also showing up in this lower study we brought here today, Helene, too. This is one that we don't look at all that often. I think it actually might be the first time we featured it on one of these TOD live calls here. But what this is an ROC, or rate of change chart. And all this is measuring, it's just looking at the kind of rate of change on the price action based on the closing prices for each day. So it's a really good indicator, just to boil it down to the basics of what it's really useful for. It's a good indicator of momentum behind stocks, price momentum, and velocity. And so what you're seeing here is, of course, when this line is above zero, so this is your zero, this is kind of your neutral line. When you see it above zero, that of course means, prices are increasing. And you like to see that line sloping up too, because that line is indicating that, of course, momentum, velocity, they're building behind stock prices and they're really moving strongly to the upside. Now, when you start seeing that line sloping down, as it has been over the last couple of weeks, that is an indication that momentum and velocity that you may previously have been experiencing is starting to slow down. And that's, it's just this is a great graphical representation and illustration of what we just were talking about. So you can see that line sloping down. It's almost all the way down to the neutral, to the zero line. Of course, you don't want to see it fall below that, because that is indicating that stock prices are now starting to, reverse and fall and start to, trend lower in the short term. So, we are starting to see that slowing of momentum there, at least at the headline index level. But with that said, Helene, I'm not sure if you spotted this, but I did today. I really wanted to point this out because we've seen a couple instances of this recently. Whereas, the headline S&P 500 index is actually down on the day about 1/4%. The equal weighted version of the S&P 500 index is actually up. It's up pretty substantially. It's very positively in the green. And you can see that reflected here in this ratio chart. This is a ratio chart taking the S&P 500 equal weighted index, dividing it by the value of just the normal S&P 500. So of course, what you see here is when this line moves up, that means that our top variable here, would be our numerator in this case, the equal weighted index, is starting to outperform the headline index, our bottom variable there. So you can see that, we have a pretty substantial outperformance given this rise in this bar today. Of course, you can see that the line's been sloping down of late, but there's been several instances of this recently where we've been having the equal weighted index, whether substantially or just barely, but still outperforming the headline index. And I think that's, not necessarily a bad thing. I think that's just more of emblematic and a symptom of starting to see some of this broadening out that we've been talking about and some rotation. But would that be how you kind of read the situation, Helene?
Yeah, absolutely. I mean, as you said, like the line is of course sloping down, but the important thing that we're looking at on for today is that one specific bar and that outperformance of the broader market today compared to the index. So, totally agree. We've been seeing signs of broadening out now for a bit, and of course, that is very bullish, and it is very helpful for the sustainability of a bull trend. Although we are seeing things stall out a bit.
Exactly. And, of course, too, it's also really important to keep in mind just historical trends and norms, too. Doesn't mean they're always going to hold true, but typically some of the more volatile, lower performance periods of time in the market tend to be August, September timeframe. That just,
Yep.
historically, it just has very often turned out that way. That's, August and September, turn out being, more choppy, more volatile times in the markets. And you start seeing, some of the more defensive, kind of consumer staple type plays, less, market leader type things start to, have a little bit better outperformance relative to the market. So, I think you're starting to see a little bit of that, people starting to rotate into those lower volatility sectors, like I said, consumer staples, utilities, things like that. And again, that's all part of a bull market. You have rotation, you have pullbacks, you have a bit of slowing momentum, in the headline indexes and in your leading sectors. And again, that's just showing up right here too. This is a chart just representing just the percentage of S&P 500 stocks that are now trading above their 200-day moving average, confirming that they're in a long-term uptrend. You can see, of course, this has
Exactly.
been rising recently. It's been making a series of higher highs and higher lows. Helene, this is exactly what we would want to see in a really healthy bull market that is
Mhm.
durable, has legs, and has staying power. You can see, we kind of went up and it barely just touched the level of 66% a couple weeks back, pulled back a little bit, and is now starting to move higher again. Just a bit above 62% of the index's stocks now in confirmed long-term uptrends. And again, this is just another illustration of what we're saying. This is emblematic of, some of this broadening out of the, bullish rally, the rising tide lifting all boats. And you're starting to see some of that rotation play out here live, on the charts. And so again, this is exactly what you would want to see, but it just means, you're probably going to start to see some outperformance in other pockets of the market. So, Helene, anything else you want to add here before we go ahead and take a look at our trades for today?
No, I think you hit everything. I will say that I do brace as we enter August. As you had said, it just tends to be a time of the year, August, September, where a lot of volatility arises and tends to be a choppier period. So, even with the market being where it's at and hitting new highs, it can't help but take a little deep breath as we enter this time of the year.
Yep, no doubt, no doubt. Yeah, it's always good to at least be mindful of those historical, patterns and trends, and kind of how the seasonality typically plays out. Again, like I said, it doesn't mean that it's going to always play out that year every single time, and
No.
every year is unique. Certainly, if it was just as simple as following a calendar, everybody would be multi millionaires, right? So it doesn't mean it's going to
Exactly.
always play out that way, but it's just important to be mindful of how these things play out, right? So
Yeah,
just throwing that out there. But with all that said, with what we're seeing in the charts, we're seeing some slowing in momentum in the headline index, seeing some early signs of that, starting to see some rotation in the broadening out, starting to see
mhm.
some of these different pockets that have been somewhat laggards starting to lift a little bit, starting to get a little bit of a boost because of this rotation. That's what led me to my trade that I found today. So I'm going to go ahead and hop into that, Helene. And what I found, it's ticker CASY. This is for Casey's General Store. So this is it's more regional based. They're more based in the Midwest. They operate a big chain of convenience stores, gas stations. That's their business model. And so clearly you can see this chart. Man, they've been having some fantastic price action. I mean,
That's a good
if
looking
if you
chart. Not
yeah,
gonna
right.
lie.
I think this is one of the better looking charts out there. I
Yeah.
mean, I was really impressed. I've been tracking this one for a while, and I pulled it up again here lately, and I was like, man, Casey's is really still performing. I wish I had one of these around the corner near where we live. I need to go check it out. But anyways, um, clearly you can see the stock's been, going from the lower left to the upper right of the chart. Love to see that, making a nice series of higher highs and higher lows. So, all of just the, top down, 10,000 foot view things. Chart looks great, but looking a little further into it, we can see that our 21-day EMA is this, our red line right here is currently above our green line, which is our 63-day EMA. This is one of my favorite, personal favorite technical systems, trend following systems to identify these buys in their short term kind of early breakouts. And so you can see when the initial buy signal actually happened was right here, actually in late March, oddly enough, when the rest of the market was selling off, largely related to tariffs, had a lot of volatility. You see this stock was actually breaking out to new all-time highs and really hasn't slowed down much since then. It's continued making a series of higher highs and higher lows over the long term. So since that buy signal broke out right there in late March, that's continued to, these two lines have continued staying in that relationship. And for much of that time, there was a pocket of consolidation here. But other than that, for the majority of the time, the share price has actually remained trading above that 21-day EMA. And currently you can see it still is doing that, just about at 525 per share. So this stock is, in a very powerful bullish uptrend. It's been confirmed for quite some time now. And the beautiful thing is that even though it looks like it's on the verge of breaking out to new 52-week highs yet again today, it's very, very close to that. Even at current price levels, despite the bullish trend, it's not currently overbought according to our chart. So we can see that the current price of Casey's is trading inside of the upper Keltner channel. So you can see it's well above where it's trading right now. So that's a good sign, seeing it's not overbought according to the chart there, and it's also being replicated down here in the RSI chart as well. So this is a 5-day RSI. You can see the RSI is currently below 70. So that's indicating that the stock is not currently overbought in the short term, but the RSI is also rising. So that's indicating a nice tailwind of momentum and strong relative strength for the stock. So, really good looking setup. All the technicals are aligned right here for this one. So I really liked it. And given that this is a much higher price stock, this is more than $500 per share.
Mhm.
Trying to trade this one with just a directional option, Helene. We run into this with
Expensive.
these high price stocks. Yeah, exactly. You'd be kind of breaking the bank just to buy a couple contracts. So trying to be mindful of position sizing and trying to keep costs down for the trade. I thought this would be a great setup for a call option debit spread. And I went out to this expiration right here. I went to September 19th and specifically honed in on this one right here. It's the 480, 490 strike spread. So looking to buy to open the 480 strike call and sell to open the 490 strike call simultaneously. You can see that the spread's a little bit wider on this one. So I'm probably going to have to go a little bit above the midpoint
Mhm.
in order to get this spread filled. But that's okay, as long as, I would just be looking to get this spread filled at 8 points or less, given it's a 10-point call option debit spread. As long as I get filled at 8 points or less, I'm guaranteeing the trade does have a 25% profit potential or more. So, of course, any further below that $8 cost for the spread, that's going to increase your profit potential. But the kind of the ceiling I'd look to get filled on this one is 8 points. So I'm going to go ahead and put my order in just at 7.95. I think I have a pretty good chance of getting it filled right there. So I'll go ahead and place that. Going to place that one here live for
And
you,
it
and
just
see it
got
just got
filled.
filled right. Yeah, it just got filled right there. Got filled a little bit lower actually. You can see got filled at 7.66. So
Wow.
really good entry point on that spread right there. It's very deep in the money, as you can see right there. So
Yeah,
that
awesome
was that
downside
was
protection there. I love it.
yeah, exactly. You can see, of course, the stock is trading, near $525 per share. I was looking for this trade. I sold the 490. So, pretty substantial downside protection for this trade. Just to show you where that is on the chart, there is the strike that I sold. So as long as Casey's stock is trading at or above $490 per share come option expiration, that trade's going to be set up to realize its full profit potential. So plenty of great downside protection there. I thought that was a really attractive looking trade. So, what were your thoughts on that one, Helene?
Yeah, I think that looks awesome. The chart is gorgeous, as we said. Clearly like one of the best I've seen this week at the very least. And to have that much downside protection is really just, it makes you feel good going into the time of the year. As we said, seasonally, we're entering a pretty choppy period. And so, when you can get that downside protection, it makes sense. Also, being in this more defensive sector makes a lot of sense too, because we saw after that April bottom with the market, these defensive plays, they did not perform as well because people were risk on again and, piling into, tech or those high flyer stocks.
Hmm.
But we're finally starting to see, as you said, the broadening out of the bull run, more money, more momentum pushing into these defensive plays again. And it makes a lot of sense to be looking here.
Yep,
Which kind
absolutely.
of
That's
leads
exactly
into
what I was thinking too. So, of course, Casey's looks like they're doing AI convenience stores based on this chart.
yeah,
So, uh,
exactly.
they've just been on a tear higher. So it just looked like a great trade setup to me. But I'm really excited to hear what you have, Helene. Which trade do you have for us today?
Well, it's funny, Blaine, where I feel like a lot of times we think along the same lines. I actually went with a grocery stock. So let me go ahead and share my screen here.
Okay. Okay. Let's see what you
Um,
got. AI grocery stores. Let's see what's going on.
Give me 1 second here. I was looking at Kroger. So this, as I said,
Okay.
is a grocery stock. When we lived on the East Coast, we went to Kroger every week. But what caught my eye with this is not only the trend, but the current breaking out of this trend as well. And so, I had kind of noted that around the April bottom, we saw these more defensive plays start to underperform. And that's what we saw here in this Kroger price movement. You can see after that April into May, we started to see a decline here in price. That's really when money was driving into those high growth, risk on types of plays. And since then, since late June, we started to see money push back into Kroger, trading start to resume that previous bullish trend again. And so, as technical traders, we're looking for the technicals to confirm this trend. I have a couple of different moving averages on my chart today. I have the 200-day moving average, which is a long term moving average. We want to see the stock above that level to confirm the long term trend. As you can see, this red line here is that 200-day moving average. It's well above it, confirms the long-term bull trend. I have a medium-term trend confirmation on here today. It's a 50-day moving average. Once again, you want to see a stock trading above that level. That's that pink line there for that 50-day. And as you can see, Kroger is trading above that. And then I have a shorter term one, which is confirming really like the power, the strength of this run, confirming the momentum of this bull run, and that's a 35-day EMA. And that's because stocks on really strong bull runs tend to trade above this 35-day EMA. We found that through our testing over the years. And so that is that green line here. You can see that Kroger is trading above it. Not only that, but you see the 35-day EMA above the 50-day moving average and the 200-day moving average, this all confirms the strength of this bull run, the momentum of the bull run, because you have the shorter above the longer ones in that order. So all of that to say, it's on a confirmed, very powerful bullish run here. And then we're looking at the Keltner channels to time our entry. Of course, we want the stock to be below the upper Keltner channel. As you can see, Kroger is currently trading below that level. And also in the last month or so of trading, we saw it go from an overbought period above the upper Keltner channels. It retraced down to the middle, and then it bounced from there, which is a very bullish sign. And then it started making a series of shorter term higher highs and higher lows, which is indicative of a bull trend. Just further confirmation once again, those higher highs and higher lows are a very bullish sign. So I'd look to enter Kroger today. And just like Blane, I'm going to go ahead and enter my trade here live. Uh, because Kroger is a lower cost stock, they're around $72. I'm going to look at a directional play for them.
Putting some skin in the game, Helene. Put your money where your mouth is.
Yeah, and this also, shows everybody how our team goes about picking call option purchases. So, I'd go to the options for Kroger. I want to go about a month out on option expiration. This gives me time to allow this trade to make money and profit. Because, sometimes you enter a trade, it might stall out for a little bit before making the move that you expect it to. That's normal, it happens. But if you give yourself some time by going a little bit further out, about a month out on option expiration, it gives you that time to wait it out. So I'm looking at August 22nd. It's July 22nd, so a month out. And then I'm looking for a strike that meets the 1% rule, which means the stock has to move 1% or less by option expiration in order to make money. And so this column right here, it says to break even and it says a percentage. That is telling me if the stock meets the 1% rule or not. We want it to be less than 1%. And then the strike will meet the 1% rule. So I am going to look at the 68 strike call. The stock Kroger only has to move 0.63% by option expiration in order for the option to start making money and profiting. Now, option prices, they jump around. So as you can see, it just kind of jumped down a bit. Let's see that bid ask spread here. So right now it's trading at 428. Yeah, has a wider bid ask. Let me go ahead. I'm just going to go with the 69 because that one appears to have a tighter bid ask spread. Yeah, the 69 is at 433. Give me one contract, and I'm going to go for 435 and click submit. And I got filled at 435. And as you can see, that 69 strike call, Kroger only has to move 0.74% by option expiration in order to break even on the option. Anything above that is a profit.
That's incredible. Yeah, there's hardly any time value in that one right there. That looks like a really great trade setup. I mean, Helene, the thing I love about both of these is, you could sit around and watch CNBC or Bloomberg or Fox Business, whatever it is, wherever you consume financial media. You can sit around and watch it all day long, and you're probably not going to hear the first thing about either one of these stocks. I mean, these are not
Yeah.
stocks that anybody's paying attention to. They're completely flying under the radar right now. But the charts look incredible, and there's clearly some opportunity out there. And we just spotted it right here live on Trade of the Day live for you folks watching. So again, thank you all for being here. And real quick, I have something I'm going to go ahead and post in the chat. I'm going to send a link through there right now so you all can get this. And it's something free. I mean, how many times do you attend something? Attend a live call and somebody's giving something out absolutely for free. I mean, hey, you just got to see 2 live trades placed here. And I just put a link in the chat that is actually going to be to a free ebook that is part of Chuck and our team's category, library of different free ebooks. This is his book called The Untold Secret. It's one of his that he breaks down a handful of his different trading strategies, kind of exactly what we were doing here today. Kind of getting into our mind, seeing how we view the markets, how we go and approach this. And, it's a free ebook for you all to take advantage of. Just go ahead and click the link if you want it. I always say, if it's free, it's for me. I'm sure a lot of you probably feel the same way. So, you have a
Oh,
chance to
yeah.
get that free ebook today. Again, it's called The Untold Secret. You just click the link, you'll have your chance to go ahead and claim it. And it's a great resource. Has a lot of great material in there. Highly encourage you to check it out. But yeah, getting back to today's call though, Helene, we saw that momentum is starting to stall in the markets. I think that is probably somewhat symptomatic of people just being aware of that seasonality, like we discussed. Of course, we're right
Mhm.
in the middle of earnings season,
Of course.
and of course, thus far, earnings season has been, so far so good. I mean,
Mhm.
most of the major financials that have reported so far posted pretty great results. Some of them, really knocked the cover off the ball and did great. Of course, we had Netflix last week. This week we have a ton of stocks reporting earnings. I think I heard it's like maybe 20% of the S&P 500 is reporting earnings this week. So it's pretty substantial earnings week. It's pretty incredible that the VIX is where it's at. The VIX
Yeah.
is at like 16, and we're right in the middle of earnings season and near all-time highs. And so there's, obviously a lot of things going on. There's the, trade war, tariff talks, so a lot of things going around, but
A
volatility
lot
is
of
pretty
headlines.
low. VIX is calm. Even though we're near all-time highs, I think people are pricing in, that earnings are going to be pretty solid. So
Mhm.
we'll really hit the ground running tomorrow. I know we have Google coming up, we have Tesla, we have IBM, so we have some, pretty, market significant earnings starting to come in over the next couple of days. So definitely something to be watching. But I think, largely stocks, even though we've been edging out those new all-time highs, I think they're somewhat in a bit of a holding pattern until we start getting some more of this earnings data in. Even though, so far so good, most of it has been really good. We've had about 80% of companies that have reported so far, beating earnings estimates. So that's great. I
Oh,
mean, if that
yes.
held up, that would be phenomenal. But I think, traders or investors are kind of pulling back, just more in wait and see mode,
Mhm.
just seeing how things come in. So, any other thoughts you had, Helene?
No, no, Blaine, I think you covered it.
Awesome, awesome. Well, folks, thank you all so much for being here live with us. And I know, of course, we're going to have the replay available later, but we always love having you folks join us here live in the room. We love getting to sit down with you all, share this commentary on the markets, talk about what's going on, talk about what's moving stocks. Again, Helene and I are going to be doing these every Tuesday and Thursday, same
Mhm.
time, same place. Would love to have you keep showing up and attending, keep growing our audience here, and keep getting able to deliver this great research and analysis of the markets to you all and show you kind of where we're looking for opportunity out there. So again, thank you all so much for being here, and we'll see you back on Thursday. Helene, great job.
Yeah, and you too, Blaine. Thank you guys so much for joining us. Yep, we'll see you Thursday.
Awesome, sounds great. Take care, everybody. Have a great week.
Okay.